Would you like to own a slice of a business that's both boring and exciting? Want exposure to the huge growth potential that cannabis offers? Like the idea of getting a market-beating yield and double-digit long-term dividend growth? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, if you want exclusive access to my personal six-figure stock portfolio and alerts on any new investments I make, check out the Patreon link in the description below. The market has been absorbing a 1-2 punch. You've got news of the Omicron variant, and the Federal Reserve announced that it'll be engaging in a more aggressive tapering process. Volatility has been through the roof. Many stocks are now well off of their recent highs. But if you're a long-term investor who's still accumulating stock, this is a gift. Short-term volatility is a long-term opportunity. After all, would you rather pay more or less for the same exact stock? Less, of course. I've been personally taking advantage of this volatility by putting some serious capital to work. Today, I want to highlight one stock that I've been buying with my most recent purchase occurring during the first big Omicron sell-off. Ready? Let's dig in. The business I'll tell you about, a business I've been building an equity position in, is one I'm really enthusiastic about because of its unique balance between boring stability and exciting expansion potential. One part of this business is pretty stodgy, but another part of it is very forward-thinking. That's right, this company has long been known as a go-to source for high-grade lawn and garden products. We're talking lawn seed and fertilizer here. Snooze fest, right? Well, not so fast. First of all, there's a lot of money to be made in selling lawn and garden products. You can make more money from dirt than you might think, as I'll show you. Second of all, this company made a huge and arguably under the radar pivot toward cannabis in 2014. That's right, they've fused traditional gardening products with hydroponics. The company I'm talking about is Scott's Miracle-Gro Co., stock ticker SMG. This company is, in my opinion, being ingeniously positioned for the future. This is a company that was originally founded in 1868. We're talking more than 150 years of history here. They've taken a solid but old school foundation, then built upon that with new economy product offerings in a very synergistic fashion. What does that mean? Well, it means proven stable growth and the potential for explosive growth. Lawn and garden products not going anywhere. This stuff has been in demand for over 100 years, and there's no reason to think it won't be in demand for another 100 years. The company took that and layered the cannabis exposure on top of it after forming a new business within Scott's Miracle-Gro in 2014 called Hawthorne Gardening Company. They've been busy acquiring assets and building out the Hawthorne business ever since. And the strategy has clearly been working. Scott's Miracle-Gro was steadily growing its top line and bottom line before the formation of Hawthorne, but there's been a market acceleration across the entire company since 2015, and I think the story is still in the early innings. The entire US cannabis industry is in its infancy. You want growth? Check this out. The company has nearly doubled its revenue over the last decade from $2.8 billion in fiscal year 2012 to $4.9 billion in fiscal year 2021. Earnings per share sports an amazing compound annual growth rate of 20.2% over that 10-year time period, helped by a combination of margin expansion and modest share buybacks. Of course, this kind of bottom line growth should translate to great dividend growth. Indeed, it has. Scott's Miracle-Gro has increased its dividend for 12 consecutive years. The 10-year dividend growth rate is 12.3%. That double-digit dividend growth rate is impressive, although it's trailed bottom-line growth over that same time frame. This has created a situation where the payout ratio has actually compressed, unlike quite a few other companies out there that have expanded their payout ratios. The payout ratio is currently at only 30.3% based on midpoint guidance for this fiscal year's adjusted earnings per share. That leaves a lot of room for a lot of sizable dividend raises in the future. and the stock even yields a respectable 1.7% here. This isn't really an income play. Instead, it's more of a long-term compounder. And what a compounder it's been. This stock has compounded at an annual rate of 17.2% over the last 10 years. That would have turned a single $1,000 investment into almost $5,000 today. You've almost quintupled your money, and they only got into hydroponics a few years ago. Imagine what the next decade or two will result in. The company, from just about every angle, is fundamentally great. The firm has averaged annual net margin of 9.3% and annual return on equity of 49% over the last 5 years. Net margin before 2016 was routinely in the mid-single digit range. It's essentially doubled. The balance sheet is sound. Their long-term debt to equity ratio is 2.2, but that looks high mostly because of low common equity rather than a high absolute debt load. The interest coverage ratio of over 9 indicates no issues whatsoever with covering interest costs, and that's even after making a lot of acquisitions lately to build out Hawthorne. I built up a small position in this company with my most recent purchase coming on December 2nd. I added to my position at $140.36 per share on that day, which just so happened to be the day when the market fell hard on an initial reaction to the Omicron variant. And I alerted my patrons over at Patreon to that transaction in real time. The stock is up almost 10% since my purchase, but I still think this is a compelling long-term idea. In fact, I initiated my position in the mid $150 a share area. Keep in mind, this was over $250 a share back in the spring. It's dropped by $100 a share. It's down nearly 40% from its 52-week high. Now, paying over $250 a share for Scott's Miracle-Gro doesn't strike me as a great idea, so I don't know who in their right mind was bidding the stock up so high and was buying it way up there. Certainly not me. But down here in the $150 a share range, I see it as reasonably valued. That's especially after factoring in the recent build out of the Hawthorne business, which has the potential to be a big growth engine for the entire company. Consider that the price to sales ratio is 1.8 here. Its 5-year average is 1.9. So the sales multiple is actually lower than its 5-year average. The last 5 years contained a lot of time in which Scott's Miracle-Gro was still largely an old school lawn and garden company. The go forward picture is totally different, yet the sales multiple doesn't seem to reflect that. And then you have the forward price earnings ratio at only 18.0 based on midpoint adjusted earnings per share guidance for this fiscal year. Even without the hydroponic stuff, that wouldn't be a terribly high multiple for a great, if stodgy, consumer products company. There's an argument to be made here that the Hawthorne business and its associated upside potential is basically free at this valuation. Although the stock is up quite a bit since my last purchase, I see myself accumulating more shares in this business over the near term. It's a great business that's taken a solid foundation and added something with a lot more growth potential to it. With a reasonable valuation and great fundamentals, I think this company will continue to compound at a high rate and grow its dividend aggressively over the coming years. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about this stock. Please make sure to subscribe to the channel and ring that notification bell so you don't miss out on new content. Also take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over at Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.